Hello and welcome to a very special cover story conversation. I have with me Sumaira Abidi, and she's here with her first book, The Indian Woman's Essential Guide to Investing and Building Wealth. She's also the Vice President of the Investor Connect at the SBI Mutual Fund. So, Sumaira, congratulations on the book. And, you've written a book that really is a very essential book for our times because, we've seen women gain financial independence. We've seen, a lot of women now joining the workforce. But I like the word you used. Can they now participate in their own money management? Can they know how to do it? And can they have take control of their money? Your book really tells them how to do that, take that first step. So, congratulations on that.
Priya, thank you so much. And it means a lot to me that somebody like you is recognizing this book. And thanks for featuring it on NewsX.
No, not at all. In fact, I'm going to help, ask you to actually take us through some of the points that you have raised in the book. The first one being that, what happens is I think women now also, take into account that saving is the be all and end all. But you begin with making that distinction between saving and investing. So can you explain that point?
So, you know what? We've all grown up, a lot of us in middle class families, and we've seen our mothers essentially save and, sab kharch mat karo, kuch baat ke liye
Ah,
rakho. But, inflation has been eating away a lot of it without us realizing, right? And even now, when a lot of us look at inflation and we're like, but, it's at 4, 5%, it's okay, it's not that big a deal. But Priya, for people like you and me, look at what we are consuming, right? The retail inflation that we get literally measures the very basics, right? Roti, kapda, makan. But you and I
mm,
are going to malls, we're going abroad for our holidays. We're eating in restaurants, we're booking banquets for our events and functions. All of these are not inflating at 4%. I mean, even take school fees, for example, medical inflation. So we have not factored in that the inflation for people like you and me, the average middle class family now, would be close to 14, 15%. So, just saving means that you're having this idle cash, which is, even if you use it in traditional instruments, you're losing out because of tax. So, this whole concept of real returns is
yeah.
what you have to understand, right? So, a return which comes into your bank account then
Mm,
has to be accounted for in terms
taxes.
of taxes, inflation, any expense that you might have. And then what you get is actually your return. And traditional, savings products, unfortunately, are not very efficient on that front. So saving, to my mind, is just the excess of your income over your expenditure. But investing means that you're taking a proactive step to make your money grow and multiply, and you're looking at the future value of that money.
Fair enough. No, in fact, that is one of the points I've actually written about to ask you to explain that because you really explained it very well. It's a very simple thing. But, you also make a good point about women, who are career driven, but women have to take career gaps either because of, their caregivers or maternity leave. And there is also a gender pay gap that still exists, right? That is despite all the glass ceilings being broken.
Yeah, absolutely. It's everywhere you look, right? So the participation in women in the labor force is increasing. Despite the gender pay gap, in absolute terms, women are earning quite a bit. They are highly skilled, highly qualified. In fact, there's a big recruiter I was speaking to the other day, and he was telling me that the latest batch of management trainees that they have taken out of every 10, 7 are
Mm.
women. And he said because they just have very good work ethic. So, they're doing so well. And despite that, it's unfortunate. And maybe it's a product of, the way we've been brought up, that somehow we seek that validation to manage our own money. Somehow, forgive me for sounding stereotypical, but somehow money has always been taken to be the man's domain. So
Yes.
girls are brought up thinking that the brother or the father or the uncle will take care of it. So despite today, somebody earning a massive salary, she feels the need to get it managed by somebody else. And Priya, I mean, I don't have to tell you, but every day we're waking up to this news of violence against women and crimes against women. And, it's all very well for us to say that I'm empowered because I have a career and I'm earning. But unless I am managing my own money, unless I have, agency over my money, control over my money, and the ability to use it when I want, I am not truly empowered. I mean, empowered is not a feeling, empowered is a number, and it better reflect in your bank account. So, unless you have that kind of authority, you cannot leave a situation that, an undesirable situation, irrespective of what the law says. So, today more than ever, I think women who are, even girls, they
Mm.
need to understand that they don't need anybody's permission. I mean, managing money and talking about money should no longer be a taboo in Indian families.
No, in fact, but that is actually a very good point because at least now our inheritance laws have been reformed so that women do get their fair share also to an extent. But so, how much of your savings, of your salary, should you save? And by saving, what do you exactly mean by that? It's not really a fixed deposit, doesn't cut it anymore, right?
Oh, not at all. And, forgive me for saying that. But see, ideally, I would go for whatever is the max that you can do. But at the very minimum, 20% you have to invest. And, I don't say save. For me,
Okay.
saving is only an emergency fund, right?
Ah,
So if, rather, let me put it this way. If you start earning today, your first priority must be to start an emergency fund, right? Because the whole point of investing is that your money compounds over a period of time. Now, you don't want to stop that compounding because, your car, you reversed into a wall and you need to pay for the damages. You want that compounding to continue uninterrupted, right? So, first
mm,
start off with an emergency fund, which is at least 1 month to begin with. Scale it up to 3 to 6 months of your expenses every month, right? If you can do it beyond 6 months, that's great. Once you have that, then you start your investing journey. Invest, whatever you can. Okay, so done is better than perfectly done. So if you can
okay.
invest, even 5%, at least get started. But ideally, 20% of your salary should go into an investment product, which is compounding over time. Women need to understand the importance of insurance. And here I mean insurance only as a risk cover. I don't
Mm,
mean insurance as an investment. Insurance is only there to help you in case of an emergency, right? So a medical insurance to the maximum premium that you can pay. And health insurance, which is, sorry, life insurance, which is the equivalent of at least 10x your annual income. But you don't have to start with that. Start with whatever you can if you are earning. uh, Budget it in such a way that you're able to meet all this, right? And as income increases, we must realize that we must simultaneously increase all of these things, right? So we are living in a very aspirational time where everybody wants all that and more. So you need to be prepared to be able to afford it.
So, I mean, sorry to go back to the basics, but the first step should really be you sit down, you see what are your expenses, do a whole check of that, how much you can save, and then, you need to make that balance sheet first, right?
Yes, of course, of course. To just be living, so in Indian families, there used to be this concept of hisab,
Hmm.
right? All of us would remember our mums and grandmothers writing it
You're
down
right.
meticulously. And even when a lot of them, couldn't read and write, they still managed hisab in a very effective manner. So we
Hmm.
need to sort of go back to the basics now. There are so many apps that help you do it, but you must track your expenses. It's especially if you're looking to create a corpus for your future, you
Hmm.
have to know where the money is going. So that is the very first step, that you must have this hisab. You want to do it in a book app, that's your convenience. But start from there and then see how you can divide the money. And I don't know, probably you'll ask me about credit cards later, so I don't want to get into it now. But
No, no, get into it now. That'll be good, huh? Hmm.
okay, so Priya, I am not against spending. Okay, I money is there to make my life convenient. right? It's
Mm.
there for me to enjoy my life. So please don't think I'm a prude and I'm telling you put all your money into something or the other, which is why budgeting is most important, right? So if you look at the latest credit card data, you will see that all of these buy now, pay later schemes, it's a $30 billion industry in India, right? Credit cards run on the concept of revolving interest, right? So you're paying personal loans, by the way, are now the largest non-home loan category, and personal loans have amongst the highest interest rates. So, you know, I'm all for spending, but to
Mm.
do it within the budget that you have created.
Fair enough. But now what are the options for investment? And which are the ones for someone, who has the sense will have their own options, but someone who is really starting out as a basic, who's grown up seeing the mother do fixed deposits, where would you suggest that they look at?
So, Priya, for me, and I will tell you that 100% of my investments are in mutual funds, and I have one which is the gold bonds, the Reserve Bank gold bonds. But everything I have is in mutual funds because my
Mm.
day job is not managing my investment, right? My day job is something else. So I am not as qualified and probably as well researched as a professional fund manager. All they do in their entire day is manage money. So for somebody like you and me who are busy doing so many other things, the best thing to do is to invest in a mutual fund. Right now,
Okay.
there is a lot of debate around which mutual fund, how many mutual funds. Again, I would say that done is better than perfectly done.
Mm.
At least start off maybe just a diversified equity fund, right? A flexi cap fund or a large cap fund, whatever you feel your convenient, the risk is acceptable to you is fine. I would strongly suggest that 5 to 8 mutual fund schemes are the absolute maximum that one portfolio should have, because otherwise it becomes very cumbersome for you to track it. So I know my own father at one point had some 30 mutual fund schemes, and I got the fright of my life when he told me about it. And then we have sort of consolidated it over a period of time. So, don't every person who knocks on your door and gives you a call and says, ma'am, I have this great investment product for you. You're not, you're not expected to invest in everything. So spend a few weekends researching it a bit. I also have a video which explains exactly how to select mutual funds. I mean, maybe, people who are watching can Google it.
Well,
Uh,
that's interesting. What is your video called? Uh,
so it's just called How to Select a Mutual Fund Scheme. And, probably if you add my name in the Google search, people will be able to
do you have a
find.
podcast series? You should. I mean, this will be very
I
useful.
should, yes,
Yeah,
probably I should. I
you
will
should.
take that up for sure. But sorry, I forgot. Sorry, I'm so sorry. I forgot what we were
Yeah, how
talking.
to choose the mutual fund.
Yeah. Okay. So, so now there are more than 2,000 mutual fund schemes, right?
Hmm.
Um, the difference between the best performing, I mean, I looked at this data some time back, the difference between the best and worst flexi cap fund was about 40%. Despite that, the worst flexi cap fund wasn't too badly off, right? And
Hmm.
it's tax efficient. Mutual funds are amongst the most highly regulated investment products in India. The market regulator, SEBI, has taken investor protection to a whole new level. And they are highly transparent because of this regulation, right? You know exactly where the expenses are going, exactly what is happening in your scheme. Every month, mutual fund schemes are making disclosures. However, if you still feel that you're unable to find the right fund for you, go ahead and take the help of an advisor. In fact, in my book, there is a whole section on how to even shortlist a good financial advisor. What are the
Oh,
questions
wow.
to ask them? So don't feel that whatever that 20, 30, 50 basis points that you have to give them as fees is an
Hmm.
expense. After all, when we go to a good doctor, we are paying for their expertise, right? So why not a financial advisor? So if you're somebody who's not very comfortable with DIY, use a financial advisor. If you can do DIY, please do. Spend a few weekends reading up, understanding. I'm all for reading my book to understand it, but I would highly recommend mutual funds.
And what is just a rule of thumb? How much of a return should one expect from a good mutual fund? At least minimum, is it 7%, 8%? What is it? Because with FD rates are 6.5%. So anything, I my rule is anything higher
Tax.
than FD is the
FD
return.
you're talking about is pre-tax, okay? So
Okay,
now
good
mutual
point.
fund schemes, because they're marked to the market,
Hmm.
I cannot give you a return expectation, but what I can tell you is that you must get the risk premium, right? Now, what is a risk premium? If I'm
Hmm.
investing in the Government of India 10-year bond, right? And that is the most risk-free investment because it's issued by the Reserve Bank for the Government of India. Now, if that is say at 6-7%, right? Now,
Hmm.
if the government is giving me 6% for not taking any risk with my money at all, should I not expect some risk premium for taking the risk of the equity market?
Right.
It's understandable, right? So maybe, I mean, a lot of people say you can take it as 5%. That depends on the markets as well, right? In highly volatile markets, the risk premium may differ. But a good rule of thumb is risk-free rate plus the risk premium is what you should get. If you're getting it, by all means, stay invested. Don't just keep chasing returns because winners will keep changing, right? So
Hmm.
mutual fund schemes are managed in different ways. There are some fund managers who manage a mutual fund scheme in the growth style, right? Which
Yeah.
means investing in stocks which keep growing in a rising market, right? They're reporting better sales, better earnings, better profits in a rising market. There are some fund managers who invest in value stocks, which means that in the intrinsic value is higher than what the stock is trading at in the market, right? So they feel that the difference is what they will earn as a return. So
Hmm.
growth stocks do well in a bull market. Value stocks would do well in a bearish market. So, not all funds will perform in every market. So do be cognizant of the fact that just
Okay.
because your fund is not performing, it's not a very good fund. It may just be the market cycle. So, returns is just one aspect in selecting a fund. There are many more things which go, but to answer your question, I think risk-free rate plus a 4-5% risk premium sounds reasonable.
Okay. Now that is something I'm learning now, thanks to you. But also, a lot of people are pushing SIPs. You also talk about SIPs.
Absolutely. I
So,
think SIP is the most wonderful product because, and I have spoken with so many professional fund managers, I can't even count it. And they have all singularly told me that it is not possible to time the market. And I've spoken to some of the biggest investors in India. And, if they cannot say with certainty that they can time the market, there is no way that you and I can. So, what SIP does is essentially rupee cost averaging, right? So when the
mm,
market is high, for the same amount, you will get lower units, but when the market is down, for the same amount, you will get higher units, right? So over
I
a
see.
period of time, your investment has averaged out and you have been through every market cycle. Now, why this is important is I'll, tell you this statistic, and it's a slightly dated statistic, but it'll get the point across, right? So Morningstar India, which tracks all the mutual fund performance, they have done a
Mm,
study in India. So over a period of time, they say over a period of 10 years,
mm,
it's only 8% of the time where the market rose and made money. So if you weren't invested through that 8%, you could not have made money if you were trying to just time the market, right? So what
mm,
SIP does is keeps you invested so that when the market recovers, you're already invested, right? What people tend to do is जब बाजार गिर रहा होता है, they feel that, oh, everything is going to be destroyed and I need to redeem my investments.
yeah.
So they are turning a notional loss into an actual loss when the market is down, right?
Mm,
Then when the market starts rising, then they realize, "Acha, theek hai, let me give it some more time. Let me see if this trend will continue." So they're again buying close to the top. So you're selling low and buying high, which doesn't make any sense at all. So the only way to sort of, erase all of this is to remain invested through an SIP. What an SIP does very effectively is it will link your investments to your goals, right? So suppose I have a goal, say retirement.
Hmm.
Now I'm doing my SIPs every month, irrespective of whether the market is up or down. I know that my retirement is another 20, 30 years away. So I
Correct.
needn't panic. I needn't lose
Oh,
sleep. So a lot of, derivative traders are losing sleep. Arey, bazaar gir gaya, ab kya karenge? How? As an SIP investor, I have not lost a single day's sleep because I know that, and there is umpteen research which proves that if you remain invested over a 10-year period, there is no zero chance that you're going to lose money, right? I mean, look at any of the scams, right? Harshad Mehta, Ketan Parekh, look at the global financial crisis, COVID, demonetization, you name it, so many wars which have just happened recently. The market has continued rising. So it has overcome every wall of worry. And if you feel that India is on course to become an economic superpower over the next few years, do you think the market will not rise in sync? It will, right? I mean, it only stands to reason. So an SIP is the most effective way for a retail investor, for somebody like you and me, to make money over the longer course.
good point. No, in fact, I was also looking at my SIPs and saying, why am I not doing so well with the, because in the last year or so, there has been a whole lot of market traction thanks to the wars. But I will now keep invested as you have advised. I'm going to take a break and come back and keep the conversation going. So stay with us. Hello and welcome back to a cover story conversation. I'm with Sumaira Abidi and we are talking about her book, The Indian Woman's Essential Guide to Investing and Building Wealth. But more than that, what the conversation that we've had, Sumaira, one is learning a lot by just hearing you, just give us basic tips. Because women at the end of the day, as you pointed out on your book, there are various stages of our relationships and you're single, you're a widow, you're a mother, you are married. So at each stage, there is, a need to look out for yourself, really. um, given that, in terms of savings, in terms of, there is also the share market that is coming out. So how does the woman really, what is the word? What advice would you give, say, for a woman who's just been widowed, who's got inheritance, but who doesn't know how to, because you talk about a case study where the husband did all the investing and suddenly the woman had a lot of money and didn't know what to do with it.
No, no. So, so this story actually comes from somebody I know, and they were telling me that 80% of their client, I mean, the women clients come to them when they face some sort of an emergency or some sort of, and sorry, can I just start that again? I'm so sorry.
Yeah, yeah.
No,
Uh,
absolutely. So I was speaking to somebody who was telling me that 80% of their women clients come to them only when they go through some unforeseen circumstance, right? Um, for somebody who has recently lost their spouse, and if they were the earning member, see, you have to take professional help, right? If you haven't
yeah.
done anything so far, my suggestion, because everybody's case is different, I cannot sit here and give a generic answer to this. So my advice is, please go through the questionnaire that I have for financial advisors and find out a good financial advisor. Don't grudge them the fees that you have to pay. It's a tiny speck in the
Mm.
longer picture. But for families in general, I highly recommend that at least once a month or once in a quarter, families sit down. And I have also written and probably people can create their own books, but there are many available now online as well, the record of documentation, right? So
Huh.
every member of the family, especially the spouse, and if you have older kids, please feel free to include them, should know exactly where the family's money is, how much is it, how it is invested, who has access to it, how do other people get access to it in the case there is an unforeseen situation. Even things like Gmail passwords.
Hmm.
Can your spouse, if you're looking to make an investment and the documentation is coming on the spouse's Gmail, can you access that? There was somebody I knew who couldn't withdraw money after the death of her husband because she didn't know the ATM pin. So, at that time where you're already going through this emotional trauma and then you're going to the bank and doing all of that, then they want, death certificate and all that. So please ensure you know how you can access that money. Not
Oh,
just that, you must have some money of your own. You may not be earning, but now the Supreme Court has even put an economic value, right, on a homemaker,
yeah.
right? Put aside some money. Don't feel embarrassed to ask for it. You have to look out for yourself, right? Eventually. And, I strongly urge the men in the family to please ensure that the women feel confident enough. Women, I urge you to read the book. There is a lot. I have explained it in a very life cycle kind of way, so you'll know how to go through it.
Hmm. Yeah, that's
And
what I wanted to mention. Yeah.
for those of us who have girls, please make an extra effort. The family is the first classroom, and if girls are feeling excluded from this money conversation or over there, they're already starting on a back foot, right? So, money is not a taboo. Please talk about it, make it very normal so that children grow up having a healthy relationship with money. Even families who are facing economic turmoil, please
Hmm.
let your children know how you're dealing with it, right? The family's money philosophy. I mean, we teach our kids about mythology, religion, and manners, and be polite and do your academics. We are not teaching them about money at all. So, I mean, there are people who come and start working, they don't know how to even file a return. So,
Hmm.
please make sure kids are growing up. With a healthy relationship. They don't think money is this evil thing which has to be spoken about in hushed tones behind
Yeah.
closed doors. And for all women, please sit down and speak to your spouse about why it is important for you to know the family, investments, how to deal with it. There was somebody whose husband had invested in stocks, right?
Hmm.
So 70-80% of his portfolio was in stocks. When he died, the lady had no experience with the market. All her relatives kept saying, "अरे बाजार गिर जाएगा, आपको अभी इतना मिला है, ये भी नहीं मिलेगा." And, she sold everything at some, I think 40-50% loss, right? Because she just wanted कि कुछ तो save
Okay.
करो.
Hmm.
But nowadays, being overly conservative is a big problem as well, right?
Right. No, in fact, I'm glad you mentioned this because, these are conversations that women think that it's a man's job. So, let him handle the money and or then the son takes over. But the girls are the ones who also need their equal participation. In terms, should women then insist on a clear paper trail, like being made nominees, like, access to bank account passwords, as you mentioned? Or make sure, at least the kids are nominees. Should everybody make a will and make it public so within the family so that everyone knows how to go about it?
Yes, absolutely. I am all for transparency. I know a lot of people tell me कि बच्चों को अभी बता देंगे तो उनका दिमाग खराब हो जाएगा
हाँ
वो
वो भी है
बुढ़े में. But it's up to us how we are raising our kids, right?
हम्म
I mean, I have a 10-year-old son, and I only started this about 3 years ago. Because one fine day he comes to me and he says, this is broken. Can we just get another one? Now,
yeah
I was brought up in a household where if something broke, you made every effort to fix it. And if it could not be fixed, then too bad, you live without it, right?
hmm
But a lot of our kids, because, we're trying to give them a lot more,
what we did not have.
benefits, yeah, what we didn't have, but you have to ensure that there is some balance, right?
Hmm.
I want 10,000 things, but probably I need 50.
Hmm. Right.
Has my child understood that? He may want the toy to be replaced, but does he need that toy to be replaced? So, don't just think that you're disclosing your wealth to your kids and they're going to use that opportunity to teach them the value of money, which is why, for kids to inherit a family's money philosophy is very important, right? For me, what may be a luxury, like for me, a car is a necessity. But
Hmm.
I know for 80% of India, it's a luxury, right?
Right.
Likewise, probably a big diamond necklace for me is a luxury, but other people need it on a daily basis. Has my child understood where our family is coming from? Once my child has understood that, I have no doubt that they are going to misuse their inheritance, right? And it's up to you to manage it, and which is why these money discussions become even more important in families.
No, you're right, because I remember my mother also. I remember when we got our first AC, she's a single mother. So we had a discussion that should we buy AC or should we go for a summer holiday? And I think unanimously everybody said, let's buy the AC. And we went and borrowed books and spent the summer reading books in a AC room. So I think there is that taboo, but money is something which you're absolutely right. It should be addressed. And the other thing that you talk about, the opportunity cost, that maybe children can also be involved in it, that we have this much, we can do A, B, or C with it,
Yeah,
rather than trying to give them A plus B plus C. So I
yeah,
think that,
absolutely.
but I want to end, but I want to just, sorry, yeah.
Priya, sorry, I'm sorry for interrupting you, but
Mhm.
one very simple exercise which I used to do with my son is, if we'd go to, say, a toy shop, right?
Right.
So, I mean, this was years ago, but I would give him, say, 500 rupees.
Hmm.
And that now it's your choice if you buy one toy for 500, or you buy five toys for 100, or how you budget it, or you buy only two toys for 200 and save that 300 for the next trip so that you can have 500 plus 300. I mean, at that
Right.
time, it was too much to expect that he would save and not use it at all.
Yeah,
But
but yeah.
there are a lot of very simple exercises which we can do even with younger kids, so that by the time children, like now, for example, my son comes and asks me, says, "Mama, do you think we can buy this?" He doesn't tell me, "I want to buy it." So at
Hmm.
least I've crossed the first hurdle. Now, if it is something very expensive, I tell him that, one third of it he has to collect from whatever birthday money and all that money that
Yeah.
they're getting. One third, so earlier it was 50-50. Now I've made it into three parts.
Uh,
One third of it he must collect by doing chores. And another one third is like good behavior points, right? So if you help someone or you've done your work. So so
Very
there are
interesting,
a
yeah.
lot of ways in which you can instill this value of money. I mean, kids shouldn't grow up thinking that, everything is available at the drop of a hat, even if you can afford it. I would highly encourage parents to give their kids a bit of a tough time.
That is true. No, and I think you're right. At this age, it's good to get them to participate. We teach them everything. Why we're not teaching them the value of money? I think that's absolutely right. But it's, I think, simple wisdom like this that really makes your book very enjoyable. And congratulations on that. Hopefully, you'll start your own podcast channel. So we'll come and watch that. But for now, thank you.
Priya, thank you so much. It was
Thank
lovely
you.
speaking to you, and thanks very much for giving a platform to this conversation, which is so important.
Right, you could make out from my questions it was something I needed to have and learn. So thank you for that.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.